we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward.
The other thing is there's a dynamic that's happened in the markets. I haven't been around for a long time. When I started in 1979, volume on the New York Stock Exchange was 40 million. And the other thing that helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone. You know,
but isn't that a good thing though? Because
yeah,
more liquidity.
it's a very good thing.
Yeah.
It's a very good thing. And, you know, and the fractional shares is given access to markets.
Welcome everyone to the Kindle Report. Yeah, the echo was just I had a live mic in the studio at the time, so no big deal. Welcome, it's Sunday. Well, we got a pretty big week ahead of us. Quick announcement before we get into anything. So it's the very first thing. There will not be a broadcast on Tuesday. I will be out of town all day Tuesday. So it will be tonight, Sunday, Monday, no Tuesday, Wednesday, Thursday. So I'll do my best on tomorrow night's video to actually set up all of the information you're going to need as we come into Wednesday, because Wednesday's a really big day. That's CPI, and so we'll set up all the metrics best I can. And it's possible if there's crazy things going on Wednesday, I will be around during market hours. So it's just Tuesday will be I'll be back Tuesday evening. So it's all. Everything's good from that standpoint. So, all right, so let's get into talking about this week. We're 1 week away from the Fed, and I've been talking to you about something over the past several broadcasts and making you aware that the Fed has a lot of metrics they look at, and they don't just look at these reports that they get, and even if they did, they would have them long before you and I saw them. It's not like the CPI was prepared, 3 minutes before they release it. That number's been sitting around. I always think of the movie Trading Places when they had the suitcase with the commerce report in there. So pretty interesting. Sorry about that. My office is positioned right by a stop sign, which every Harley guy revs his engine as he comes by. So I muted out for a minute. It's all good. So we come into this week, I mean, this is going to be the beginning of setting up, getting ready for the Fed. So the Fed has the numbers. They have a lot of other numbers. I don't believe they rely on all these government agencies because none of them are very good at what they do. We already know that. Maybe the Fed's a little better at what they do, maybe not. But they are not relying on the same retail numbers that they show us monkeys out here. Okay, so just know that they've got a whole another thing. I talked to you a bit. I did have a buddy that worked in the New York Fed once upon a time, which is where the main big trading room is. And yeah, they've got a lot of other metrics they're looking at. Anyway, so let's talk about as we come into this week. There's nothing for the first two sessions. The CPI does not come out till Wednesday. Wednesday and Thursday we have. Let's just go through the economics, and I'll come back and talk about some other elements. But the reports are coming out Wednesday. CPI expected to. They're showing an increase across the street. I did some research on this just a little bit ago, and up 0.6 year over year, up 0.4, up to 3.6 on CPI. So they're looking for the retail part of the consumer price index to be up. On Thursday, we get the PPI. They're expecting it to be up a little bit. I found some really contrary stuff out there when I was going through some of the sources I normally look at, try to figure out which one might be the best. And I'm looking at right now that I saw one that was actually expecting PPI to be down to 2.2, another one up 0.2 up to 2.4 on a year over year number. And the monthly is kind of all over the place too. The consensus number was 0.3 up on the month over month. So there's a little uptick expected. Is that what we get? I don't know. I've been talking about, I think last week, one of the videos that I put out was actually named, is inflation actually starting to increase? And it's far from over, right? So just at my little truck stop behind where my office is here, there is, I think we went from $3.97 a gallon retail to $4.09. They've already jacked it up. So, we know we've been seeing crude rally, all that stuff. So it's starting to show at the pumps. That first time I've seen a jump, it was hanging around. I think it was 402. Now it's 409. I noticed when I was coming over here to the studio today. So, yeah, there's definitely some increases coming. Do they matter? Probably so, and I'm sticking to this. It's funny because markets have probably come more my way. I've been talking about the Fed's going to do another increase at the meeting. So we're going to get into this whole thing where everything we're going to be focused on is going to start to focus on the Fed in this meeting and expectations. So you're going to see a lot of most likely volatility depending on how the CPI and PPI numbers come out from that standpoint. So it like I said, it'll be pretty interesting. Also then on Friday is, there's one more report on Thursday, actually two more. Retail sales is expected to be up 0.3. And then we have the claims and the continued claims. Claims have been coming back down. We talked about this whole labor market situation. This continues to be very robust, even though we saw some numbers not that great on the employment, but the week-to-week numbers, overall things are pretty stable from that standpoint. Continuing claims came down back under 1.7 million, down to 1.69. I've got a down arrow on this. I think it even continues to get better. Now, this is something I was that I wanted to talk about. Let's get on Friday, and then we'll go to capacity of utilization comes out, expected to be 79.2. There's also industrial production. That may be Friday, may be Thursday. The way I wrote it down on my sheet here, I'm not positive. I think it's Friday, though. Industrial production, I told you before, anything with manufacturing industrial numbers, they're really negative. They're expecting down 15% on industrial production. So we're seeing the whole manufacturing thing, even though Joe Brandon says that everything's better and Bidenomics is changing the world. Well, it is indeed. He is right about that. But the point that what we're seeing here as we're coming into these numbers are probably going to see, once again, weakness in manufacturing. Services is still in expansion, especially when you look at the PMI numbers and those type of things. So let's just talk a little bit more I just on setting up the Fed and expectations. So the volatility we're likely to see around these PPI and CPI numbers are probably be reasonable. So it's a shame I won't have a video for on Tuesday night to cover whatever kind of setup we have there. So like I said, on Monday night, I will do my best to set up some of the parameters, probably use some of the weekly numbers. I'll start to identify that tonight as we go through the technicals here in just a few minutes. And it's very interesting because you folks know I'll go through the WaveTech database here in just a minute, and we're seeing stabilization. I know just last week in the general feel, we all get these gut feelings, right? And my gut feel is like I just want to scream, get negative, and then you look at the numbers, and here we are, and everything rebounds. So I'm going to deal with the rollover and the premiums, forward premiums on the December contracts. We're going to deal with that tonight. We're going to roll it into the analysis on the technicals. I hate that we rolled on a Thursday. So, and it's about almost 2 weeks before we have quadruple witching coming this month. So there's a lot ahead of us. This month of September, I had set up a number of months ago. I think even when I did when I talked with Meet Kevin on that interview that I did, I believe I discussed that around early to mid-September is where we start to see maybe some shifts here. And I think that is exactly what we're setting up for. And I'm trying to nail this thing down the best I can so we have some good solid numbers and expectations as we come in there. Hopefully the technicals will give us some pretty good stuff to look at there. I'm just looking at my notes here. Yeah, we saw, so one last thing I'll mention before we move on, just to set the tone. So last week, S&P down 1.3, NASDAQ down 1.9, and Russell got destroyed down 3.6. And on year to date, S&P's up 16, NASDAQ up 3.15, and Russell up 5.1. I ran across something. I was on LinkedIn earlier today. I have a fairly big network, like 20,000 on LinkedIn, but I ran across some story that came out, and one of these, an advisory firm trying to defend their underperformance. It was, oh man, it would make a good Saturday Night Live skit. But they were talking about how and why the dividend strategies, and I always tell, this has been a story for me for a long time, but dividend stocks are just the most risky stocks that you'll ever deal with, and everybody found that out in 2008. And they tend to have a lot of debt. They have a lot of different things. So people think they can hide behind dividends and hang on to stocks. It's a really bad strategy. It works sometimes, but on general, it's just it's a really good reason for an amateur advisor to tell you how to hold stocks, and you're getting paid while you hold. Yeah, not always. Anyway, just had to make that comment. I saw that and it just really triggered me. I could go on a complete rant on that. As many of you know, I've spent since 1998 working with advisors. We still work with quite a few, and we're starting to embrace a lot of new folks coming back because they're massively underperforming and they need help. And anyway, so let's go ahead and get into the database, and I will I'll set this up the best we can as we come into this week, because there's a fair amount of stuff that's going to affect the markets. Let's get into the database. All right, here we go. Get some interesting numbers. We'll start here with the daily. We're back to 32.38. We printed down to around 27 and change. It was kind of the number that I had talked to you about where I thought we might try to settle in, and we should hold around 27, no lower than 22. 27 was it so far. And then maybe we start to get a little rotation. We've got to get back over 42% on the short-term database to do anything significant. So let's go over and look at the intermediate, because that was stable as I expected. So I'm going to go full screen here just so you can see the whole outlook here. And so we have 61% of the stocks are still long on the intermediate database. So that's a pretty good percentage. We're up printing around 78 on the high. So we've seen a bit of a pullback, and now what we're likely to see is staying above around 58. We should not drop below 58, 54%. We should remain in that pattern, and then that will set the tone as we come into the third week of September, coming in, moving toward we come into the 1st of October. Somebody's asking, are we bullish again? Not really. You'll see here in a minute. We're just maintaining this trend that we've been in. And the chart that's on the screen here is the universe chart that is inside of WaveTech. And that has, I forget the exact number, but I believe there's about 5,800 stocks in that database. So it's almost like the Wilshire 5000. It's actually a little bit bigger. So there is a lot of symbols that in here. It's not all 15,525. It's all, I believe the metric is 500 million capitalization or higher. And that's all the database is built around all of that. So we're really looking at this. There's still an uptrend here. And we haven't made an all-time new high even on this index. It's a equal weighted, it's really a price weighted stock, so you can't actually price weighted section on as far as looking at these values and trying to walk this forward. But we still have some things that capital goods is as well extended here. We've got conglomerates. There's a number of sectors that are a bit extended, but there's plenty to rotate to yet. We're still looking at a lot of these symbols are only about halfway through, and there's not a lot of their, from the standpoint of their maturity or the number of days that they normally go. So I went over to another chart here, and over on the far right hand side, this is important on the intermediate database to understand, as the duration fulfilled right now on the weekly is right now at about 33%, and normally it has 204 days. Right now the average days long, or the current duration, is 68. So we have at least, this number keeps extending itself, and because of the rotation, because there's buys and sells that are coming in and out of the database. So it's very dynamic. So you start to normalize, and this is why I talk about where the percentages need to stay. Like when I say, hey, we need to stay over 42, or there's a 58 number, the 58, 55 number that I just talked about, that is really what we're just seeing, this rotation. And I think these markets stay in this crazy mess. You'll see here in the technicals here and what I talked about last week, I still think we're still kind of locked in this trading range. There might be a slight bias to the upside. This rollover and these prices are, at least from an analysis standpoint, is actually putting us back above 4,500, even though the near contract is still in the 44 handle. So I'll cover that when we talk about the rollover here in just a minute. And it's, but the overall look and feel of what's going on here right now, still forward looking on the intermediate. the short-term database and what happens here. And when we start the week, I try to cover the database a little deeper than I do during the week because we're a day behind all week because of when I do the broadcast. So this is important just to understand that the short-term database is kind of rotating. So it gets really bullish, goes up, you get profit taking, the intermediate database backs up, which we did. We went from 78, roughly 78 to down to 61. So almost 20% of the database is rotated out. And then what we should see, if we're going to see another rotation and positive as we come into the fourth quarter, which is basically at the moment the expectation. We'll see how it sets up here in the next couple of weeks when we get in. Really, we won't have a really good setup on that until we get into October from that standpoint. But for right now, the expectation is kind of that way based on the algos, based on the forward-looking database, all that stuff. So what we should see out of the short-term database is some kind of positive rotation, continue to grind for a little bit. As I mentioned, we're at 32% bullish. And what we should see is it start to pop into maybe, 42, get above 42, get some traction. Then we should see some traction come back in on the intermediate as well. But it probably doesn't get much over 68%. It just goes up a little bit and it starts to rotate. But the stocks that are left, hopefully I'm making sense here. So the stocks that are left in the database, as long as we stay over 42% on the intermediate, are the ones that are going to carry us forward into Q4 and potentially into January, February. There's some seasonality there that is also going to pull us up. Think about, when did we make the low last year? We're coming in to around when we started to talk about, we started to see the database get some traction in September, mid-September, early October. That's when I started telling you folks that we're starting to see some forward-looking type patterns. And I remember there was some guy on Twitter or something that was going, we'll see how it looks in October when we get there, because I was talking about in January that these forward-looking numbers were going to carry us into where we are right now. And they pretty much have data. We know the numbers, everybody that's on this channel. We know we printed up over 4,600. All of that happened, and now we pulled back. We're with the help of premiums and rollovers, we're still printing 4,500. We're really not very much off of the lows, and so off of the highs. And we're just seeing really a rotation here. So that's the database view. And as those of you that have been around this channel for more than today, you'll know that this is a really important part of the analysis that I do every night, especially when you start to get on the short-term macro area from the idea of cash flow and what's going to be flowing around. Like I said, there's still a number of sectors here. Let's see, I'm on weekly. The sectors to be watching is still healthcare, financial, believe it or not, is a long signal. That thing hasn't been long for a while, so that's reasonably significant. That's probably going to take a while to play out, even though we saw the banks get hammered last week. There's still some opportunity there, especially if you're a WaveTech user. You can dig into those sectors and groups and see which ones are playing out. I won't do that tonight, but the whole overall pattern, you can see which ones have, they're well under their typical holding. Something like financial, it has a holding of 296 days. And those are trading days, folks. That's a year and a half. And I've talked about this before when the banks were rolling over, and I talked that we had been out of the financial sector for a while, coming in long before Republic and all the junk happened. We didn't own a lot of banks coming into that scenario. We own a few more now, but we're starting to see some accumulation in this financial sector, which is really plays out for an interesting scenario. And I always talk about doing that fundamental, looking at the technicals, looking at the database, and trying to figure out fundamentally what the scenario is going to be to drive that type of narrative to make those things happen. I don't have one for you tonight, but that's something that will evolve as we come through the rest of this month. It's 9/11 tomorrow, which is a significant day in American history, as you know. And, we're right at this midpoint, and with all of the inflation numbers and the Fed next week, we got a lot to get through. So, but I do think that some of these financials are very worthy of a look, especially at WaveTech. You're going to be better off at least trying to find things that are starting to trend from that standpoint. Yeah, and I see somebody talking about 7 to 8% cash, and that may be very appropriate for what you're doing. Most of the bulk of our portfolios right now are about 62 to around 72% invested. So that amount somewhere between 35% in cash. And a lot of our individual stock portfolios don't get much below maybe 40% unless we're in this really nasty market like like in '08, we got to, even on the individual stock portfolios, we got down to 100%. Okay, so let's go ahead and get into the technicals tonight. All right, like I told you, we're going to deal with this. You see this big jump in prices. All of a sudden, we were trading under the 200-hour moving average, this red line here, and the market just jumped right above. And the reason why it gapped and jumped, that was because of the rollover on the contract last Thursday. So it's been stable. I've looked at some of the technicals, and I just need to integrate this in. It's part of what you have to do when you use continuous contracts. So that is, that's one of the things that we have to deal with. What's interesting, I'm going to take off the percentages here real quick. Let me take the probabilities off. Just you can see the flow on the hourly. We're looking at some really sideways, maybe coming back in 4,500. We'll go through the market grid here in a minute on the daily and the weekly to set up at least expectations. We do have downward projections here on the hourly chart right now, and we're looking, there it is, 4,500, 4,490. And then fib target 344.84, and that would put us back to the 200-hour moving average, and that's been fairly significant. That's I took off the percentage number, so that was in red. So if I turn that on, you'll see that there's the red 200 again right there. But it looks like we're probably going to climb along that 200, which is right around that 4,500 level, maybe a little bit below, dip down to the 40, which would put us down here at 44.85. So they're at least setting up that tone. We'll go through the dailies and then the weeklies because it's Sunday night. So this is going to be a significant number here from this standpoint. Talking about the stability that's being forecasted on the PPMs here. And I believe, let me look at these values because I think they're all set to the same here. And just to look at the inputs, the coefficient is 150 and 50 bars looking out. So those of you who have the indicators, I try to use that 150 coefficient. If you do bring this up on a chart and there's no forward looking, no projections, then you're going to have to drop that coefficient number down. And I don't like to go much under 50 to get a good reading on expectations. But so there's a slight upward slope. The PPMs are right at trend mode on PPM 1, which is 0.22. PPM 2 is basically flat, and PPM 3 is also actually a little bit negative. So whenever we get these moving average configurations like this, typically the 10 has enough to hold it at the moment. That value is 44.96. So right along that 200-hour, just talking about around 4,500. This is the December contract that we're talking about. And so that is really is probably going to be the support line. Anything much under that, we start to look at the market grid here for Monday. You can see 4501 is S1, so there's that number again. Nice little clustering between 96, 4496, 4500, 4502, 01. There's several numbers in that, right at that level. And that would be an S1. R2 is 4532. And if we just continue, even with the rollover, start to look back at, I think we got up to, let me look at these high numbers that we got up to on the previous contract. I think it was 45, 41. Looks like the high there. I'm just looking here. 45, 47 was the high on September 1st. So that's going to be the number. We do have live Fibonacci targets on the upside, and this is something to pay attention to. And these were new numbers that came out back on August 30th, 31st. And so they're still live. Like I said, we do have the benefit of the rollover, but still they're live numbers. And we're looking right now at Fib target 1 on 45.88, 46.73, 47.26. So these numbers are in play. I suspect that this high number, just under 4,600, will be the number we'll get at. Maybe we'll be able to find something here on the weekly charts. So let's go ahead. So S1, R2 tomorrow. Use S1 as a pivot. If we did take out S1, all of a sudden you're looking at, from a market grid standpoint, S2 is 89, which puts us down around that 85 number. I think that's a little extreme for tomorrow. We'll probably have a fairly quiet day just because there's really no news. There are a bunch of treasury auctions around, so there could be some hidden risk in there on Monday and Tuesday. So that's something to watch. So I'll cover that a little bit more here when we get into the interest rates here in just a minute. But this overall pattern looks fairly good there. If we look at the weekly, let's set that up. This is very interesting. I always tell you folks, this is all live analysis as we go through. I glance at some charts. I try to really come in here with a pretty clear thought on what's going on. But we have, here we go. We have new Fibonacci targets. And those upward fib targets right now, let me bring them up on screen so you can see them. We're looking at fib target 1. Are you ready? 49.22, 51.40, 52.75. Now this is weekly, so those will come into play. If I go backwards, we come into January. We had targets back in January for a fib target 1 was 44.66. If we follow that line along, we did hit that number down the road, and we didn't hit it in this pattern here, but the secondary pattern, we got some new fib targets here. There was a clustering of numbers between if I just look at the numbers here, there were 44.66, 47.25, and then we got an updated number here at 44.19, 45.18. So we ended up coming into that range. Now we're getting these new fib targets. And I always tell you, it's imperative that I discuss these things because this is, with this upward slope, these are real numbers. At least the first fib target one is something to pay attention to. 49.22 is an ATH, an all-time new high for sure. And I'm just telling you that number's out there, but it looks like if we just look at like strength, we're coming in into October. There is some increase, looks like being forecasted, and this will change, and we have a slight upward slope here on the weekly. So like I said before, it's pretty difficult to get super bear mode in here for a number of reasons from Bob Kendall's viewpoint and my analysis. And the reason why you folks are here is that I have a database, I have an intermediate database with 61% of the stocks bullish right now. And we typically, that's not the profile where we would start a major decline from. So we have to go with that forward-looking ideas that I discussed in just a few minutes ago in the database overview. So we have this forward-looking environment from the standpoint of there's positives and stocks that are only met about 30% of both their holding period as well as their expected return. I should have covered that a little more in detail and brought those numbers up. But if you have WaveTech, just go look at the stats page and you'll see what the percent is and what the normal returns are. It's about 30% on average on all of the trades. When you normalize and you look at a database with 15,000 symbols in there, there's going to be lots of stocks that do better than that and some that underperform. But overall, that expectation is this forward looking, and the algos and everything is just telling us that in general, as we come into fourth quarter, we have probably another seasonal tendency to catch another bid this year. Unless there's something that comes apart that we don't know about right now, it looks like that will be the case. And we have some pretty significant numbers, and we hit some of those because there was a fib target number. There was a pivot number down here at 43.96. And if we look at the numbers that we printed going back several weeks ago, the low was 44.14, 44.34 was 2 weeks ago, or last week's low. And then if we go back one more week, we see 43.65. But that pivot number wasn't in play until this week here on August 28th, the week of August 28th. So, and now we have new upward Fibonacci, brand new projections coming out of the system tonight. Yes, Murphs, don't hesitate to mute any of the trolls. I see somebody making a comment here. So yeah, just mute them out. It's okay. I'm not reading it, so if you find it annoying, do your jobs. I appreciate the Smurfs out there. All right, so let's go ahead and let's get into the NASDAQ, see what this is set up. But, 1 second before I move on. The market grid for the weekly we need to look at. So market grid expectations this week. Now this is with the rollover. Remember, this is the December contract. S1 44.83. So there's that 85 number again. So 44.83, upside 45.38 and 45.69. So S1 R2 maybe with all these numbers that are coming out. I think they're probably going to find a way to keep this stuff fairly positive. I don't think the CPI triggers any selling, but who knows? It's all possible. So like I said, but that's your parameters. S1, R2 is likely scenario on the weekly. All right, so let's go to the NASDAQ. So we'll go top down. We'll start with the weekly. Weekly NASDAQ looks pretty good, actually. In spite of last week's little backup here, these numbers are pretty positive. I just had to move down. I wanted to see that. Guess what? We got new upward targets here as well on the NASDAQ. So weekly fib targets at the moment. Looking at fib target 1, 18,865, 20,004. Let's see, 491 and 21,496. I would argue maybe this number here. We also have what? We've got Apple coming out with a new iPhone 15, and who knows? I saw a interesting thing real quick, just mentioning NASDAQ and Apple in play there, is that the M2 chip on the Apple, they're claiming is almost as good as the NVIDIA chips for AI. Now, I don't know if that's true. They're saying that giant Apple machine can actually run a large language model in-house with that one monster. I think it's like $20,000 or $30,000 for this completely juiced up Apple with the M2 chip in there. So I don't know. You folks can comment on this if you know much about it. But I thought it was kind of interesting. And it's very possible, because people have been talking about this, that Apple tries to insert themselves with that. I mean, I think Elon Musk, I saw just recently, Tesla, I bought, I'm going to get this number wrong, folks, but there's a right number, but it's a lot. They bought I'm going to say 250,000 NVIDIA chips or something, and just built this big AI machine. I believe Meta's got a new AI out there, especially for programming, called Llama. I'm pretty big into AI and tracking some of this stuff. So, there are some things that they're going to try to pump this. I mean, who doesn't want to be on the NVIDIA wagon, right? So I would suspect that Apple may make a play, and I don't know if they'll insinuate it or if they'll just come out and say it when they go through their big giant meeting that they have every week. Yeah, and I think there's an M2 chip as well, Todd. But I think that this could be significant. So I digress. Go back to the analysis on the NASDAQ. The reason why that came up, NASDAQ's not hitting any of these projected Fibonacci numbers without Apple. That's not happening. Okay? So, that little dip on Apple and the little troll stuff that came out of China and Apple and how many iPhones because Huawei's getting all the government business or something like that story probably is ultimately insignificant. But we'll see if the and the traffic to GPT is going down. But so what? That's because most people that are using it are just playing. The people that are serious about GPT, especially GPT-4 as a helper for programming, I use it for that as well. I was able to put some things together for the new indicator suite by using GPT-4. And there's some other things that just came out there that are significant, and there's competition coming to GPT, right? So OpenAI has got competition. Like I said, Musk just bought a bunch of chips, and he's already mad because he was part of that group that started OpenAI. So there's going to be lots of competition. My point is the chips, not AI. AI is long from being over just because GPT is dropping down. And I think if I was looking at some of the stuff there, I don't want to get too deep on that stuff at the moment, but the deal is this: if we have these Fibonacci targets, there's no way that's happening without it. And maybe in Chris's opinion, Apple, or in somebody's opinion, is overvalued by 40%. Maybe so. I think it's been overvalued since 2000 by at least that for decades, and it doesn't seem to go all that. Bode, go ahead and do. Looks like. Anyway. Yeah, take care of this. Thank you, Bo. Anyway, but this is the whole point. I'm looking at these fib targets. I'm doing real-time analysis here. What's going to get the NASDAQ to 15,000, 18,891? Apple and everyone else. NVIDIA, Tesla, they all got to be on board. So that would suggest there's yet another surge. And that doesn't mean lower interest rates. It doesn't mean anything other than there's demand and this market is still expanding. Sorry to get on that sidebar. So I probably did that, but I'm just really when these thoughts happen, I got to put them out there. So I feel sorry for people that only watch 15 or 17 minutes of these broadcasts, because you never know when I'm going to get in on one of these. It would be nice to have somebody to pull all these nuggets out and put them into one video. But I did predict that Apple would possibly go down, and it still may. Okay, they typically decline after their big meeting, but I'm just telling you, the NASDAQ's not going to get there without Apple turning around at some stage. So that's without going through. Maybe what we'll do tomorrow night, since I won't be around on Tuesday, folks, if you remind me, I'll do the I'll maybe go through some of the stocks like we've been doing it at the end of the broadcast. Okay. So yeah, sorry to get on one of those little rants, but they just kind of happen when they happen. There's a lot of things that I look at and study, and sometimes they will just come out in a live, especially in a live environment like this. But there's definitely, So I'm just unfortunately reading the timeline. I normally do this, but I just want to say, listen, everybody knows about China. All that stuff's out there, and and China's an important economy. But those guys will stimulate. They have no morals whatsoever. They'll do whatever they take. They're not going to go down the tube. So, they've already got Evergrande back up and running again. So don't count them out. I always say there's two things, like in the U.S., if you have a legislature and so you can change the laws and you have a printing press, you can do whatever you want in spite of what anybody thinks. And China has even the next level from that standpoint, my opinion. All right, so let's so that new Fibonacci kind of triggered me pretty good. But what we're talking about here, and this is interesting from that standpoint, is we're really looking at some flatness coming in, just kind of going flat into these moving average. That number is October, November, December, maybe January before these kind of numbers get hit. So I'm not talking about tomorrow. Hey, look, we got a new Fibonacci. It's going straight up. No. What I'm saying here is we're going to see some further consolidation. What I mentioned in my opening comments, it looks like all these charts have a slight upward bias, but for the most part, it's stability that is coming into play. And that's what I'm talking about here from the standpoint. I don't know if anything that comes out of Yellen's mouth is Grandma Yellen is worth listening to. But yeah, but what we're seeing as we come in, once again, as we come into October, there's being some momentum is projected, whether it does or not, to come into play. But it makes sense from a seasonal, that's where we saw things turn around last year. I mean, how many people, think about this, folks, just for a second here. How many people thought that we were going to roll over and crash all summer long. I mean, we had to listen to this BS 4 months. And fortunately, I never bought into that because our database was getting more and more traction. We were seeing a completely different story unfold. And the story that I saw was the right one to see. You know, you could go down the list of all these characters like George Noble that had a ETF he just closed up because he was a short ETF. And that guy makes Kathy Wood looks good. So, you know, but my point is that the metrics that I talk about on this channel continue to suggest, looking forward, as I showed you in the database and talking about the intermediate database, tying everything I've said so far tonight together, is still forecasting forward looking out 100, maybe 120 plus market days, not days, but market days. And that's the better part of between 4 to 6 months. So, you know, we're looking, it's September, folks. Okay. We're looking at end of year end, maybe January into February. And we all know that the seasonally, there's a lot of bias as we come into year end. So especially if I'm sorry, I'm trying to get out of this loop I'm in here, but especially if we're into any of this stuff that goes on from the standpoint of the what's going to go on with AI and this hype that's still around that market. And, you know, all of these new trends and stuff, you know, I've been around a long time. I've watched all of this stuff happen, including, you know, .com and all that. And that was a phenomenal run. And this is much different than what we have here. The markets are structured much differently than they have been. So I'm going to get out. I'm going to jump out of this loop so that we can move on and we can get through the broadcast, because I'm into this thing 52 minutes, folks, and I'm at NASDAQ. So I'm definitely getting long-winded tonight. I apologize, but you know, we'll see what happens. You know, and you know, and those of you seen, and we'll do the update here as we finish out this final month of the quarterly. But you know, when I would just say it, let's just go on. All right, I need to get out of here and just move on. Let's go to the daily NASDAQ just so we can set up the next few days here real quick. And so look at the NASDAQ being projected here. PPM's staying stable. PPM 1 plus 0.34 trend mode. So watch that 10-period moving average, 15,428. That's going to be your support. That's your buy your dip number for tomorrow. We also have, if we look at the market grid coming up here, we look at market grid, we're looking, let me just get the numbers here. So we're looking at 15,428. We're looking at S1 15,444. So that's probably where it should hold. S1 R2 is possible tomorrow from the standpoint just with this upward slope. And it looks like we're going to stay fairly positive here on the PPM1. PPM2 is also expanding. So I talked about this a bit last week where you're seeing this PPM2 starting to turn up. And possibly when we get over here to, this is always interesting to me, around the 18th, which would be the day before the Fed meeting, that would roll us into the into where the looks like we're going to pivot a little bit from momentum standpoint as we come into that once again, and not this week, but next week as we come into that 18th number. Yeah, and I'm trying to stay out of the conversation, but just so we can get done tonight. But yeah, so I watched the market with inflation in 13 and 14% range, and we watched the stock market go vertical. And I've talked about this before. The stock market is one of the best hedges on inflation there is, and it's kind of interesting because this is. Yeah, so I want to be involved in this conversation. I think it could be very interesting, but I'm going to go ahead and finish tonight's video here. Yeah, and I agree with what FF is saying about the market. I really want to do this, folks. I want to come up on screen and just have this conversation, but I'm going to end here. But I talk to some folks around here all the time, is that the millennials, those of you in the millennials, you guys are the next big thing. You're going to be running everything as we come forward. And the point is, they are getting into their early 40s, and the changing of the guards has already started happening with the Gen X people. And ultimately, I remember when I was 38 years old, and I came in and I became the head of financial analyst at a firm. I was running a very large operation. That was when I started to see things start to switch. And at that age, around 38 to 44, I started my portfolio management company when I was 46 or 47. Okay. And so these are really, really great productive years. I know some of you think you're nearly effing dead when that happens, but it's not. These are the most productive years that are coming. And then just remember that the millennials are followed by the Zoomers, right? The Zs are the smallest generation ever that there's ever been in history. So we're seeing the peak population. We're seeing the peak everything happening in this next 10, 15-year level. So I don't dispute that there's some big rollover, something happening, but there is a lot of momentum and a lot of things happening that is playing into the current demographic markets and I could go on for probably an hour just on this, because there's a number of things and factors that are happening that are huge mega trends that don't change very quickly. And that's exactly, the Gen X's are the next players, and they're pretty good size. The millennials are monster big. And the problem is the millennials aren't having kids. They're not having anything. The Zoomers are already showing you that. And the next generation after that, it's what Elon Musk talks about all the time, folks, is that what we're seeing here is that we're seeing a peak population. And this is not just the U.S. or China. The only country that's growing right now, population-wise, is India, period. China is going to implode by 400 million people in the next 20 to 30 years. So all of this stuff is happening big time. But from an economic standpoint, from productivity, this is where AI, where technology and things that are out there. I wish I could hang around with you guys for another 40 years. I know that's not realistic, but the reality is that there is I think a probably parabolic super boom on its way, and it's already starting. And this is where people are making mistakes and talking about stupid crashes and high interest rates and all that. I'm sorry, I'm on a big rant here, but it's just that situation that I believe is just going, if you play on the other side of this, you will lose. That's all I'm going to tell you. You can be as negative as you want, but I'm just telling you, it's everything. Yeah, I'm just telling you, there would be ultimately fewer and fewer people, and productivity better be really high, or as Elon Musk has said, the end of mankind is in sight. And that would be the case. So I would just say my wife is constantly going, she's ready to go to Mars with Elon. She's always like, when things are really messed up around in the society, she's always like, Elon, get it ready. Let's go to Mars. I'm ready to go. So anyway, all right, folks, rant completed. Let's go on. Let's go to the Russell here. So, like I mentioned here a minute ago, is the Russell got hammered pretty good. What did I say? It was down 3.6. Yeah, I'd love to just do this for like 3 hours. From the, there's always there's so much stuff going on, folks. You know, there's just so much stuff, and it's not all bad. Sometimes it looks like it's all bad. So the Russell, I think what I'll do real quick here is maybe I'll bring up the KRE. I'll bring up a couple other things that, but the Russell got hammered. The banks got their butts kicked last week big time. And the whole point of what's going on from the standpoint of this trend, and I'm going to go to weekly because this is daily. I want to go to weekly and rescale this. And this is a market that's gone nowhere, not really up or down. It's just been stable. And this plays hand in hand. I'll try not to get too deep. Wow, we're over an hour right now. So I'm gonna roll downhill here pretty quick. But this is where the financial sector might have some play, and I will do longer term, but I'm actually just brought up the monthly chart, and you can see this scenario even better from the standpoint of what's going on. I don't have enough data to show you the forward-looking stuff, but this has been a giant consolidation. And what if? Okay, I'm going to do a what if. Oh, look at this. So I haven't zoomed out on this so we can get this number. The Russell, I was just going to put this together. If any of you have been in the live trading room I used to do, you know this scenario that I'm putting out. In fact, I'm going to put up an indicator that I don't normally show you folks, but it's going to be the pattern finder. And I'm going to try to blow this up, and it should show us this. Yeah. So the pattern finder is way better than for marking highs and lows. It's like great, especially if you're doing Elliott, to use that. So if you have the indicators, I don't talk about this indicator much, but it's really handy. You're sitting here doing analysis. What we're seeing here is this consolidation. I'm going to draw something in. Man, I hope you guys brought your popcorn. I'm sorry, I should have warned you. So I'm making up for Wednesday right now, okay? So we'll keep going here for a while. Let's take a look at something I want to show you real quick, because this is a significant, this will be a significant pattern that I want to show you. And let me just get the sizing here. I'm going to make this just a little bit fatter. And instead of arrows, I'm just going to draw lines, and I'm going to make this thing jump out at you. So this is the pattern I'm talking about, where you're looking at numbers to like this expansion. So reverse fundamental right now. What would happen? What would make that potential thing happen? That would have to be a giant move in all these secondary stocks that just about everyone has told you these people are going to die because interest rates are 5 and 6 and 7%. That's not the case, and it sounds from my viewpoint, this stuff is what's happening in the world longer term, and we see this when I bring up that quarterly chart. I'm not going to bring it up tonight, but when we do the long-term stuff at the end of this month, we come into the final Q4 of this year. When we go through that, I mean, folks, it's just bullish on the long term. There's no way to be a bear in this market. I don't give a crap who's president. I don't care who's doing what. I'm just telling you, just some of this conversation we had about demographics, millennials, the Gen X's, and the millennials, us boomers, are done, and we were the biggest group prior to that, and we have screwed up more shit than anybody has ever fixed. I mean, wow. I always say my dad was a World War II guy, so greatest generation. I'm saying that the boomers were the absolute worst generation ever to exist. I mean, look at that. You go look through Congress. You can figure it out real quick. You don't even have to be that smart. We were really, really bad group of people. We screwed up stuff left and right. Did some good stuff. You know, everybody, those iPhones and everything that you did, those were all that technology came out of the boomers. You know, out of technology that was built all the way through 80s, 90s and evolved. But we were bad. All right. I'm sorry. I'm in rare form tonight. I'm not sure why, but let's just move on. So enough about that, but you can see this pattern. Let me close out this tool so I can move on. All right. So all downhill, although I say that we got to go through the 10-year. I'm going to leave the pattern finder up there for just a minute so you can see this. We pretty much have kind of I think this is potentially a right shoulder. But look at this. We're still on this monthly chart. So I'm staying really long term here for a second. But look at this. How about the fib targets on the 10-year at 6.45? All right, so that's a huge number. I'm not going to touch that one at the moment. Let's go to weekly and get back, come back down to earth here. And weekly, we've actually played out some of these patterns. The extreme fib target on the weekly 10-year was for a 450. We'll call it 447. We printed up. What did we get to here? We got up to what? 432, is that it? 436. So we're pretty close to 447. You could call that close enough. But we are seeing a flattening off at the moment. I'll save that long term. That'll trigger me when we do at the end of this month. We come into 1st of October. I will do a long-term view from the standpoint of what is potential as we go out. Those upward projections to 6% on the long bond or on the 10-year. I have talked to folks about ultimately I think mortgage rates could see 8-9% at some stage, and you know I think everything's going to get kind of reworked a lot. From a standpoint from there, and you know, and all this CRE stuff is also yet another one of those things that they want you to believe in, that the commercial real estate's going to collapse. It's not. Those guys are all in the big money is holding that. There's certainly properties that are going to fail. I got a interesting a buddy of mine. There's a building in downtown Phoenix that they're converting into an apartments, and they're selling partnerships in this building for $25,000 to accredited investors. And I had a buddy call me trying to solicit me in on these things. I don't know if they're good or bad, but my brother, I have to quote my brother. I told him I quote him from time to time, but he made this point. He goes, when things are really messed up in a particular industry, there are literally millions of people trying to figure out how to make it work. And so they're all out there trying to figure out how to reconfigure buildings, and at some stage, whether people go back and work in buildings again in big cities, who knows how this all plays out. And But if we go to the demographic scenario I just played out a minute ago, then you're probably not going to need a lot of space. Although we're still short on housing, pretty big. Yeah, FE. I remember that as well in Oakland. I lived in the Bay Area for 14 years, so worked in San Francisco. So I remember when some of that talk was going on as well, and yeah. So it's going to be interesting, folks, and things are going to change, and that's the beauty. What was it? The one thing you can count on is change, and the prediction of mankind coming to an end and all that is not a very worthy cause anyway. So let's move on. So 10-year, this week we're looking at probably peaking out. We got the market grid coming down. Let's go to the 2-year because that'll give us a forecast here. Yeah, so forecast sort of sideways here at the moment to up a little bit here. This is the weekly charts we're looking at. So a little bit of upward bias. We have these big downward fib targets down here, which seem fairly ridiculous. 3.5, 2.9, way down here at 2.6. Not going to happen. More likely one of those island formations that I talked about. I'm just squeezing down, make sure there's no upward targets here on the 2-year, and there's not. We basically, if you go back and think about this, back in April 17th of this year, the fib targets were for a move to 430, 460, and 5%. And we spin forward in July, we hit 511, and we came right into those fib targets. So they seem at the time we're 409. And all of a sudden you're projecting out to, let's see here, out to 5.25. I remember talking about these numbers. Well, we went to 511, so we basically came into that fib 1 or fib 2, fib 3 targets. All right, so I think we'll get through here. Man, hour 12 still going strong here. Let's bring up crude oil. Crude oil still climbing higher. That's a weekly chart, so I'm going to get through the rest of this pretty quick here. Weekly forecast still higher. Should have some pretty decent strength into Fed meeting anyway. So everything's lining up. I'm talking about this for weeks. Somewhere the week of the 18th is going to be, that's the week the Fed meeting starts on 19th, 20th. So everything's focusing in on this week, starting to hit peak values or some change coming from that standpoint. Uh-oh, we got Peter Schiff on here, $20,000 gold. So, Peter, is that you? All right, so let's go ahead. So that, like I said, that number should, we've got an angle of attack here that's running us into year end. So it's kind of odd that we get these kind of numbers at this time of the year, but it's happening. And if you can see here, this is probably a wave 4. This is probably wave 5 of this move. So this is most likely wherever we end up is going to be climactic, and that should be it from that standpoint. All right. All right, so we got gold and Bitcoin. We should be able to finish up here in the next 6-8 minutes. So I still have this, I still have the pattern finder up there. You can see we're just zigzagging around, kind of an ABCX, ABC. We have downward projections here on a weekly gold, which is going to make Peter Schiff very sad for a move down to the 200-week moving average, which is down around 1820, 1830 range is the downward projection. I'm not sure we get that, but we definitely have some movement where we're going to see prices come down into that wedge, and we'll just have to watch it. There's nothing positive going on with gold at the moment. Just generally speaking, it's still going to be, I think, under pressure. And the luckiest thing will be if it just stays sideways, and maybe then it can turn around. So a lot of times you have expectations for a market to come down. We actually had that expectation going back. If we go back to June and May and June, I talked about that. We did get a little downside, but we never got to the extremes that we're looking at. So that was that whole scenario. But this right here, you could argue, I can click over to a monthly here, and a monthly is actually got some huge projections to the downside down to 1345. And if the 10-year printed 640, that's where gold will go. You're not gonna have a chance. But the metrics going out longer term are still suggesting upward bias, and then at some point. But we're looking monthly. Where my cursor is right now, we're out in 2025 already. So that's a year and a half from where we're sitting right now. So there's some upward bias. There is Fibonacci targets on long term for the possibility of, let me get this number, 2172, 2267, which would make Peter very, very happy. So, okay, let's get to Bitcoin, and we're out of here, folks. All right, got to do it. It's just been one of those streams tonight that I'll have to bring up. This is monthly Bitcoin, and there's a big pivot here, and this is the drop dead number, or buy the dip if you see it, which is 18,840. I actually don't think we get there, but look at there's live fib targets. Fib target 1, 55, 71, 80,000. Just round numbers. That's what these are up here. Very similar to previous numbers. But these have been calculating for a little while. So the PPMs are potentially going to turn up a little bit. Not going to go in. I just had this chart up, so just have a look at it. This is something we've been talking about, that we should see some of this. We're still hanging on to that 40-week moving average that I've been just going on and on about, and that was the 20. Let me get this number here real quick. 25,540. We printed down to 25,386, and we're currently at 25,844. So we've been hovering on that number, and PPM 3 down here says we're at 0.86, that there's only about a 15% probability that the price will drop below that number. And then we do have some live fib targets there. Fib target 1 is right on that number. Fib target 1 is on the downside 25,539, so we've hit that. Fib 2 is 23.1 and 21.6. I'm rounding numbers off on that from that standpoint. Take a look at the short term real quick, and then we will be done. Short term looks like here's one of those wedges. I'm going to draw this in because this works. And those of you who have the indicators using my setups that I have here, everybody asks me what setups are good. I show you every night the setup that I use, which is the PPM 1, 2, 3, and PPM 200. Those are my go-to. I have the 10, 21, 40 moving averages, and then I have all the algos set up at 150 and 50 bars looking forward. So that is, those of you have the indicators, a bunch of you have them, that's the setup. I show you every night what the setup is. And that's for the the primary setup there. But let's just real quick, this little wedge right here, I want to show you. I'm going to draw it in, and then we're going to call it quits. Been a long stream tonight, $1.20, hour 20. Wow. All right, so this is it, folks. This little wedge right here, when these moving averages get like this, markets will stay in, will get in here and then decide a breakout direction. And so my expectations here is we get upward bias on, and this is the daily, upward bias as we come into the Fed meeting. Everything's kind of pointing up. You can even see we've got this happening over here, and I'm sure if I took this, let me just take it off, but that's what we're looking at. Let me just see where that crossover happens. Of course, right at the Fed meeting. So this wedge plays out right into the Fed meeting. So everything's going to be, I guess, at least from a market sentiment viewpoint, on that level. Okay, folks, I didn't know we were getting into a popcorn night, but we did. Just remember a couple things. You should have some emails. The new customer loyalty code for cheap second version of the indicators. So kendallreport.com/indicators, and that would get that. And it actually should recognize that what the discount is. If it doesn't, just send us an email. We'll send you the code. But it actually, I tested it multiple times last week. And yeah, so anyway, let's call it quits tonight. Hopefully you folks had a good time. I wish I'd have told you to have the popcorn machine out, because there was plenty to talk about tonight, as it turned out. But I'm making up. I won't be here on Tuesday night. Remember, tonight, tomorrow night, no Tuesday, and then Wednesday, Thursday this week. So we should have a fair amount to talk about Wednesday night, because we'll have the CPI coming out. Then we can set up the PPI, which has sort of been the better number to watch anyway. So anyway, that'll be it. Yeah, so like somebody's saying, go ahead, hit the like button, subscribe, all that good stuff. See you tomorrow night, same time. Hope you enjoyed it. I got on a couple of rants tonight, just one of those nights. All right, folks, take care. See you tomorrow night. Hey, Michael, I started at 6 p.m. Eastern, roughly. Tonight I was a few minutes late, but that's the target. Hey, Tony, if you watch the video on the market flow, typically I use 21.3. There's a 310 setting. You try to map out the markets the best you can and get it to line up where the buys and sells are hitting pretty good. And you probably have to do it about on a short-term chart, every 3 to 4 days. You should be able to get some pretty good signals. Just adjust the numbers until the buys and sells show up. Hopefully you're hearing this over the music. Anyway, watch that video again. I think I described that pretty well.